Good afternoon to you. Nice to see you. Up first today, fighting foreclosure. While the states take on lenders and Washington sits on the sidelines, fed up Americans are taking back their homes. Case in point, the Earl family of Simi Valley, California. The bank changed the locks, kicked them to the curb. So they gave the bank a taste of their own medicine, changed the locks, moved back in. Can't make this stuff up. The Earls, just one of the millions of stories that are out there. This particular family, 9 children, 6 of them adopted, and they regularly took in foster kids until their lawyer claims they were wrongfully evicted. Like so many homeowners, the Earls did fall behind on their payments and were in the process of doing a workout, they believe, with their lender to try to get back up to speed. Now, according to the Earls, the banks, instead of conducting that workout, tried to pull a fast one, bilked them for tens of thousands of dollars more than they believe they owed. They got a judge to deny them their day in court, so there was never the need to illustrate the necessary paperwork. And basically were able to finish the dirty deed, change the locks, sell the house before anyone was able to put 2 and 2 together. Clearly desperate times as banks try to avoid dealing with their inability to prove who owns the house and the potential threat that they may have to reveal trillions or hundreds of billions in toxic loans that were stuck in the gut of the American taxpayer at Fannie and Freddie, not in compliance with the government standards that were set for those loans in the first place. But more importantly, desperate times for the families who no longer have a place to call home while our politicians and bankers play dodgeball with the issue. The Earls, as we mentioned, are one family who is fighting back. Danielle Earl joins us today in her first national television appearance alongside her attorney, Michael Pines, and I thank both of you for giving us some of your time. Danielle, if you could, in brief, tell us in your own words what happened here.
Well, we were trying to make payments, trying to get caught up on everything, and we thought we were just about there. And when I called to get the amount that we still owed, it was a lot more than I thought it was. And then when I ended up making a large sum payment and the amount didn't change, I demanded an accounting for where all the money went. And instead of sending me an accounting, they sent me a notice of default.
Michael, is the story Danielle just told common in your experience?
Very common. It happens all the time. As bad as you think it is, it's probably about 1,000 times worse.
And let me just be very clear on what we're suggesting here, which is that there's let's say, I don't care what the number is, $25,000, $100,000 owed. You make a lump sum payment to that number, thinking that it's going to go down. You could look the next month and the number hasn't changed. Is that a fair characterization, Danielle?
Yes, it is.
So
actually, the number went up.
Would you elaborate, Michael?
Well, the number went up. They kept increasing as she made payments instead of decreasing the amount they claimed she owed. They kept increasing it.
And Danielle, did they ever address that?
No, they didn't. No, and when we got the notice of default, like he said, it was, I had just talked to them on the phone a few days before, and somewhere in that 2 days, I owed almost an additional $20,000. So I don't know what happened over those 2 days, but it seems a lot more than just a regular payment missed. So something went terribly wrong.
And did the
banks aren't owed any of this money at all. They're owed zero, and so it's irrelevant to them. And what they do is keep increasing the amount they claim is owed in the hope that the borrower will keep sending them more and more money, become more and more frightened and intimidated, and that's what they keep doing. They never send her an accounting because they can't. It's impossible. There is no accounting. They're making it all up. And they just pull these numbers out of somewhere, and nobody knows where, and they keep claiming the homeowner owes more and more money. As Danielle will tell you, she sent them a lot of money, over $100,000. She kept sending the money, and every time she sent the money, instead of crediting it to the loan, they just increased the amount she said she owed and would never explain to her where the money she sent them went, how it was applied, when it was applied, because they can't, because they're just making it all up.
In this instance,
and as she
in this instance, sorry to know, who's the bank here, and do they offer any explanation other than we're making it up?
No, they offered no explanation whatsoever, except they're making it up. They, of course, didn't admit they were making it up. We don't know who the bank is, and nobody knows when you say the bank. If you're talking about the lender, you know, when you say there was an originator of this loan, and when you're talking about the bank, you would need to define that, because we're talking about financial institutions, and as Danielle will tell you, she began investigating this herself by going to the public records, going to the county recorder's office, and all these entities that she'd never heard of that had nothing to do with her loan whatsoever kept popping up. And the name of some of those entities are the well, anyway, they were people nobody ever heard of. And so she was rude enough to ask them who they were, and they would never answer.
All right, listen, I want to ask you guys to hang on for 1 second. I want to introduce another voice to this conversation. From California to Florida we go. Last week we introduced you to Nancy Giacobini, another story we first were able to bring onto the national stage on this program. Nancy was struggling with her mortgage payments, but was not yet at the foreclosure stage. So you can imagine her terror when the bank came to change the locks on her house. In her particular instance, you do not have to imagine that, because it all played out on this 911 call.
You hear somebody trying to open the front door?
Yes. Yes.
Ma'am?
My alarm is going off.
Stories like Nancy's leading Florida's Attorney General to start issuing subpoenas demanding any and all documentation that could prove unfair and deceptive trade practices, unconscionable acts, and unfair competition. Matt Widener is Nancy's lawyer. He says to expect bombshell details once these documents see the light of day. Very specifically, Matt, what information do you believe will be disclosed?
I think we're going to continue to find that what these banks have done all across this country and the way that they've victimized consumers all across this country is going to fundamentally destabilize real estate markets all across this country. You know, Dylan, I want to give you a lot of credit because you first brought this story to the nation's attention, and about the same time, Congressman Alan Grayson has been calling for attention on these issues. But I want to make it clear that you brought this to the attention of America. Since then, our Congressman Grayson has ramped up the heat and the pressure on these banks and institutions. We just had a press conference with Congressman Grayson at Nancy Giacobini's property, where he demanded investigations of all these institutions.
Danielle, what is hold on 1 second, Michael. Danielle, if you were to look at real life, aside from all the lawyers, aside from all the politicians, can you just give us a little bit of a sense of how disruptive this has been to your family and your life? And as this is not some sort of TV drama, this is the lives of not only you, but millions of Americans.
Oh, absolutely. And it has been terribly disruptive. For the last year, we have not known when we're going to be out on the streets, where we're going to go when we are. And just listening to the coverage that you just did, I had chills, and just because we lived that too. And that was just, it's just very scary.
Michael, go ahead.
We're still...
Well, I just wanted to follow up on what Mr. Widener said, and I've heard of him, and I'm glad to finally see it put a face with a name. And I want to say this as clearly as I can and succinctly as I can. And I don't think I'm overstating the case. This is not only residential, this is commercial. And I say with a high degree of confidence that nobody in this country knows for sure who owns any real estate, residential or commercial. The only real estate that we can be sure of where we know who the owner is perhaps somebody who paid off their property before the 1980s when securitization started, owned it free and clear, and passed it down from family to family. Other than that, in my opinion, any piece of property that was bought, sold, or refinanced from the early 1980s when securitization started until now, nobody knows who owns that property. Nobody.
The bank's argument, however... Go ahead.
And according to Gretchen Morgenstern, who at the New York Times, who's been following this very closely, the total amount of money involved is $45.5 trillion, roughly twice the size of the U.S. stock market. And my opinion or suspicion is that lawyers will be arguing for the next 2, 3, 4 decades about who should pay for that $45.5 trillion. And I don't know that our economy I don't know that we have that much money that the government can fund that $45.5 trillion while they try to figure that out. And I'm sure that's what they're trying to figure out now.
Dylan, I want to step in here if I could.
Go for it.
I think it's important to note that the American people have already paid for this. What we need to understand is that when the federal government set aside $50 billion, 50 with a B, that money was intended to provide homeowners like Miss Jacobini and Miss Earl some assistance, some support to get those mortgages modified. Instead, what we're finding is the servicers pocketed that money. The American people gave these servicers a lifeline. We gave them support. We bailed them out. And what they're doing is they're choking consumers all across this country with that lifeline now. That's got to stop, and it's only because people like you are reporting this and Congressman Grayson are talking about it that now consumers all across the country are understanding just how fundamentally violated our rights are at this point in time.
At the same time, I want to address what Michael Pines just said, which was a large magnitude statement to say the least, which is I think it's important that all of us, as we muster the courage to face the truth of the structure of our housing market, the collaboration between the banking system and the federal government, need to understand that as we resolve this, that this, more than anything we have been through so far, including the entire 2008 financial crisis, may be the basis for which we will need a resolution trust to reform those banks that have been pretending to be solvent at the taxpayer's expense for years, and that it is this foreclosure chain that will ultimately reveal the insolvency in the large banking system that has come or has been covered up by the absorption of all that bad debt into Fannie Mae, into Freddie Mac, and into the Federal Reserve. Do either of you, I'll ask you this, Matt Widener, do you think that the attorneys general, that Alan Grayson, that our political leaders are prepared not only to look into this foreclosure crisis, which I view as a sideshow, which is a cover-up for the real issue, which is the housing finance chain coming out of Washington, D.C. in the banking system? Do you feel like there's a political leader who is prepared to do the hard work of working this out in a way that is not destructive or antagonistic, but is honest and compassionate in the need to restructure this system?
Look, Dylan, they're not prepared to do that until our press continues to do what you're doing, and now increasingly the national press is doing, and that is shining a light on all of this. The quicker we come to grips with this problem and stop avoiding it and stop denying the major problems that exist within our financial system and the real estate markets all across this country, the quicker we'll be on the road to recovery. But the longer we deny this, both at the state levels across this country and at the national level, the longer this crisis is going to play out. This is an onion, and every time you peel back a layer, there's one more layer, and it just gets stinkier the closer you get to the core. So what Americans have to understand is this is not just about these homeowners that are in foreclosure. This is about every single American. This is not a Republican crisis or Democratic crisis. It's an American crisis. We all need to be part of this.
And it's a crisis of property rights, which is the core principle upon which this country was founded. It will be very interesting, especially on the political front, to see whether the Tea Party finally steps forward where they refuse to, in objection to the financial reform fight, and to step forward now to defend property rights in this country at a time when clearly they are in need of some defense. Danielle, my greatest sympathies for the suffering and tumult in your family as a result of this, and compliments to you for the courage to do not only what you're doing, but to come out in public and have the conversation with us. Mr. Pines, Mr. Widener, keep us posted on your legal efforts, and we'll do the same here with our journalism. Gentlemen, have a good afternoon. Danielle, thank you so much.